let's take a look at SP or SPX, the triangle.
We've come back up. You can see we've gotten out of our ascending triangle.
Uh-huh.
We fell through. We came down, followed the Bollinger down, popped back up, to the 20.
Yeah.
Let's just look at it. Let's look at it a little closer then. And you can see we're finding resistance at the 50 now. So we went up 50, 50. Today we're back down under the, we'll be testing the 9 for support again. RSI's trending down. We got a flat MACD. So again, starting to see this, sideways indecision. And a lot of times you see this, especially before the FOMC meeting, you'll start seeing the stocks just kind of, sit there and, indecisive.
Right.
And that's kind of what I'm seeing right now. We'll see what happens tomorrow, but we have the intermediate resistance level, which is my green line in the sand, right above where we are, and we've got the 50. We're still over the 200, but we'll see what happens. Let's see what the Dow's doing today.
Okay.
Dow's about the same, except the Dow is now trading a little bit under the 9. So here with the Dow, we came up, hit the intermediate resistance, came back down to the 9, came up to the 20, and see how the 9 and the 20 are squeezing. Okay, we squeezed us right out the bottom. So now we've got a Bollinger Band, down here. We're seeing a little bit of a dip in the MACD again. The RSI, the momentum's down again. Okay. And then we go over to Qs. And Qs are trading, below the 20. They're trading below the 20. And even with the 9 is just for the last couple of days, just kind of going straight. Seeing a convergence here. We're just flat on the MACD. Kind of waiting for some news. So tonight we've got Amazon coming up.
Yeah.
Let's take a look at that. And by the time people see this, we'll know what Amazon is. See, Amazon's just kind of trading sideways along right below the intermediate resistance level, which we've hit twice in the last couple of days. And look how tight it is with the, the 20, and then the 50 and the 9 are all right here. So something's going to happen. We're going to pop up, pop down. Who knows? Let's take a little look out, see what we got with Amazon. See, Amazon was about the same as what we saw in, in the Qs, or in the S&P. So we'll see what happens with Amazon.
Yeah, I think they're a big indicator, leading indicator for the consumer spender. That could be very telling for sure.
Here's Meta. I mean, when Meta came out with their earnings, we talked about this a little bit. They were really good, but their guidance was below what the market wanted. So it came straight down. We have a big gap. And a lot of times you see this, it'll gap and then they'll go sideways. Well, it's going sideways toward the Bollinger. We finally got within the Bollinger because, again, we always talk about how on average you trade 5% outside of either side of the Bollinger, upper or lower. We're back down to the Bollinger now. But the MACD is still showing some weakness, well, a lot of weakness. Got the RSI basically, at 30, going sideways. So we'll see what happens. I'd imagine, we're gonna need to see this Bollinger come back around instead of diverging so much. 9's chasing down. So we'll see what happens once we get inside, the Bollinger Band. But that hasn't recovered. Let's look at Netflix. This looked like the same chart last week after earnings. Yep, you can see what happened.
Yeah,
they're just moving along what is the intermediate resistance level now, and we're just moving sideways. We came back inside the Bollinger Band, kept going sideways. Bollinger Band is starting to roll over, a little bit more. We'll see if it comes back up, and if the 9 can come down, and we actually get a candle above the 9, we'd be above the 200. And then we need the MACD to cross over too. But before I see this coming back up and filling that gap right there.
Yeah. I mean, you look at, what whatever the Fed comes out and says this week or tomorrow, this could be the thing that triggers these to start selling off against these resistance levels. And in a way, it's sort of looking, I would think, be looking for that confirmation of what the Fed's going to do.
Yep, so let's look at the monthly because today's not the month, so we'll go out a year.
Okay.
Oops, let's go out a couple of years. Let's go out 5 years. So here's the monthly.
Mm-hmm.
Okay. So you can see this is on the SPY would be the first red candle month in 1, 2, 3, 4, 5 months.
Yeah.
Okay. Um, and we're closing down below the Bollinger, but we're still above the 9. Okay. But you're seeing, the first red candle in 5 months
Yeah.
on the SPY. Let's look at the Qs on the monthly. Qs, another red month.
Huh.
Look at the DIA, look at the Dow, first red month. But see, they've been following the Bollinger. Now look at that Bollinger roll over.
Right.
So
Looks like the MACD is doing the same
yeah,
along with the
we're seeing it.
RSI.
Yeah.
Yeah.
Let's look at a weekly chart and see how that looks.
Same thing.
Pretty much, yeah.
Yeah.
You're seeing on the weekly, we're below the 9 on the weekly. So if you're trading this on the weekly, you would have been out
Yeah.
already. But and look at the MACD on the weekly.
Just heading south.
Yeah.
You just really
So
can't argue with just the process you teach in the Platinum channel. It's
it's
just
a
you just can't argue with what
well, I
this is
mean,
showing us.
it's hard to argue with the data. Okay, and these are all lagging indicators, so something can happen, and you
Sure.
know, and you can get a boost. Let's look at well, let me go back to daily, and I'll show you. A boost like um, let's go to like yep, look at that. Gotta go back a little bit. Let's go 6 months here. See, here's what happened on when you get a little booster
Yeah.
and you get earnings that went out good. This is Google. Boom, shoots up like a firework, and then you run out of gas, and then you can see it come back into the Bollinger Band.
Yeah.
5% outside comes back in. Can this keep going? Yeah, but right now
Good.
we're seeing 3 days down. Come down here, we're seeing kind of a rollover in the MACD, a little bit on the RSI. Let's go look at we'll go look at the weekly. Back it out a little bit, see what we're doing in the weekly on Google.
Mm-hmm.
Yeah, you see what happened. So
It's
weekly,
coming.
we've come back down within the Bollinger Band on the weekly. Monthly, check this out. Whoops. Yeah.
Yeah.
So the monthly, because we had that big earnings within the month, you can see it popped it up. But here's a big wake up. You can see where we've come back down to lies back on the Bollinger Band.
Yeah.
And again, we're above this intermediate resistance on the monthly too. We'll see if that will hold or if that zips back down. So interesting. I mean, but once you start doing it, you'll wonder why you never used it before, even in investing.
Oh
Because
yeah.
it's a tool. It's instead of going out and cutting your grass with a sling, or you're cutting it with a big old mower. It takes you 30 minutes to do it, as opposed to 8 hours.
Right.
And that's what this does. And you have to have a trading plan, that fits your risk style and risk management. I have mine, and it's published on the Discord, and you don't have to use it. You can look at it. You can make your own, which is what I suggest because I'm very conservative. I don't
Mm-hmm.
like losing money. Some of our people in our Discord, they're more risk tolerant, and they'll be a little more risky than I would, and they're successful doing that. They spend more time looking at it. I don't want to sit in front of my screen all day, like looking at it. So that's why I swing trade on a conservative point of view. I mean, even if you did long term, let's just say you wanted to do long term investing and use the charts. So even here on
Yeah.
a monthly chart, okay, if you used it, you would probably have gotten in right about this here. Okay,
Yeah.
so let's just use the top 123.37. And right now on Google, you're at 165.52. You're still in the trade according to my trading rules. If you're
Yeah.
trading on the monthly,
Look at Tesla, and this is on a monthly basis. I think this will give you an idea of really where Tesla is trading at right now.
there you go.
It had the big pop. after earnings. It had the big news event over the weekend with the discussion or talks or agreement with China. But if you look at it from a monthly standpoint, all it has done is continuously go down. If you go to the peak back in, was that big 02 or 22, and draw a trend
Yeah.
line just off the tops there, it's a downward trending stock. And then you get your fundamentals involvement in it and the macro, you know, perspective. And this is telling me that this is not a stock yet. It's not ready to be bought yet. Even though, you know, they promise the world, um, it just doesn't make much sense.
Yep, there's your channel.
Yeah,
So, they always say the trend's your friend until it's not,
right. And I think
um,
as an individual investor, if you're not a swing trader, but you're more of a long-term, investor, you can use these charts, you can use these skills that you teach, and you can apply it to a long-term perspective. And what this is telling us is, there's more risk to the downside in Tesla than there is upside potential for return right now.
oh yeah, I
So
mean, you're under the 9, you're under the 50, you're under the 20,
yeah,
um, and you're consolidating a little on the bulges. But if you would have gotten in on a monthly swing trade back here, let's just say here, this is 31st of January at
mm-hmm.
43.37, and you're still above where we were, and you would have probably gotten out, let's just say here, and that's at 252.75.
Uh-huh.
So you would have gone from 33 to 252 on a monthly. That's an investment during long term
Right.
before you got out.
And and I
So
think
you don't have to look at it a month,
yeah,
basically. You
right.
know.
Well, and the thing is, like, you could actually just trade an index. So let's just say the S&P 500, use SPY as your vehicle, look at it from a monthly standpoint, and you could basically manage your portfolio based off
Yeah.
that kind
Well,
of
right
thing.
here, you get in at 308.36. Get out. Well, there's a one in the winter. We'll just do that one.
Okay.
That's I can get it on there. 412.893.
Mm-hmm.
Okay. Unless you were doing something you're more conservative, said, okay, I hit an upper Bollinger Band or I hit a resistance level, then you might have been out at 474, just how you play it. And again,
Yeah.
you pop back in over here and you're still up,
Yeah.
so
You,
let's just say right here, right here is a candle, 396.26. And today you're at 505.07. You're still in.
yeah. And how long of a period of time was that?
Well, we would have started
Oh,
March
three,
or
two, I mean,
February,
23.
February 28th to today.
Yeah. I mean, so that's
So
easy.
that's an investment. I mean, so why, even on your investments, do it monthly. Okay. And then you get out. Okay. Put it in a treasury bill, make 5.5%. If you still like the stock or you like the index, put it
Mm-hmm.
back in when it's ready to come back in and take the gains and not the losses.
Yeah. It's
Once a
not that,
month. Just
yeah,
once
and
a month.
you don't have, it doesn't have to be that complex. And I think that's the thing, is most people, one, they just are convinced that they don't know what they're doing and they don't have the capability of learning it. But number two, if they took the time and just applied what we're just talking about here, you probably save yourself a whole lot of money over your
Yep.
lifetime, you know?
Let's say you're in love with NVIDIA. Okay.
Yeah.
So here you followed it. You got out here, and then you got back. This is monthly. Okay, so on this month you followed. Okay, I don't have a full candle above. Here I do. Okay, so I get in. I get in at on the 28th of February again, $232.16. I'm still in it. Okay, based on my trading rules at 868.43. So you're up 600 some dollars trading as an investor, not a trader.
Okay.
Okay.
When you said what was that, February 28th of what year?
2023.
2023. So you've
Yep,
been
so
in
over a
it.
year ago.
So you've been in it over a year
Yeah,
and you haven't had to do a thing. You just wrote it
nope.
up.
You
And
just
now
watch
you're,
it.
yeah, and now you're looking at it and you think, okay, I've got, if this month closes out with a red candle, maybe you get two more red candles. So that takes you, or you come
Yeah.
down to the 9
Well,
and
I
it
mean,
goes,
you look at this and you say, okay, I'm still got it. I got everything, the 200, the 50, the 20, they're all still going up. Got a MACD that's still positive.
yeah,
Got an embedded stochastic, and I got a RSI that's just embedded also. So, you know, if you want to get out, guy, you got a good gain. You're at, what, 867 minus,
300 something,
yeah, minus 232. So eight
230.
minus two, yeah, 600 some dollar gain on that. You take half off, let the rest roll. Take principal out. Let the house money go. Get out
Right.
when it tells you to get out. You're still in.
Yeah. Well, it's interesting. I had a lunch with a friend of mine who's a mutual fund wholesaler for one of the big companies. And I asked him, I was like, well, how is the industry working now? He made the comment. He says, well, they're pretty much all the advisors now, a lot of them are going to the broker dealers models, and they're just out collecting assets. And I said, so you're running 60/40s, 80/20s, that kind of thing, or 40/60s allocations. He's like, yeah. I say, and are they like taking a sort of tactical approach with it? And he goes, you know better. No, they're not. He said, and he flat out said, he said, I fired my Merrill Lynch advisor last week. I was like, really? He goes, yeah, you look at his 3-year returns. I was up like 3 to 4% on average. He goes, the portfolio he personally managed. He goes, I just have a very simple approach. And he goes, I was, over 20% annualized, and it's like, and he's like, I don't have time to sit there and look at it every day. He's like, I'm looking at it every week on Saturday, making some decisions and going from there. So I
Yeah.
think it puts, when you learn the process and you create a process and you stick to it and have a trading plan or investment plan, you empower yourself. You build confidence, you empower yourself, and eventually, understanding how these guys get paid, you start to make more money than them and you become your own portfolio manager. And
Yep.
that's what our goal is. Teach you how to do that.
Yep.
Uh,
Well, you look at, it's so hard to find out what your fees are. You can see on an ETF or a mutual fund, this is what they charge you. Okay, but you I was never an investment advisor per se like you. I
mhm,
was in operations in the business, but you get your cut out of that too,
right.
at some point. So everyone gets a cut out of the customer money.
Yeah.
So then you got to look at, okay, what is my performance and why is your cut and your cut and your cut and your cut bigger than my cut? And it's my money.
Yeah.
Welcome to Wall Street.
Right. That's where I think that I sort of like the hedge fund model where you get paid your base. Say it's, I know for a lot of the big guys now, it's 50 basis points plus 20% of profits. If you don't make money, you don't get that bonus. You know, the 50 basis points, the 100 or 200 basis points that they charge, that's operating costs. That's just to keep the lights on. Where they make their big money is the 20-50%, where they get of profits. And I often wonder if you applied that to just the regular world of, the financial advisory world, would you see more attention to what markets are doing, more understand, would you see a higher edge or a more educated financial advisor? You'd have more specialists for sure, you know. So anyhow, um,
What do we know? We're just two regular guys.
that's all we are. We're just two regular guys who just ask a ton of questions and challenge, and because of our backgrounds, we know how it works. It's now okay. Let's free the people, free our subscribers from these shackles.
Let
So
my people go.
let my people go.